for those wanting to invest their money further east, how will the euro crisis affect the Russian market, and are there sectors within Russia and the surrounding region which are resistant to turbulence? Delighted to say Levan Vasadze is the chairman of Moscow-based private equity firm Prometheus Capital Partners and joins us now. Levan, thank you very much indeed. Well, look, there's a couple of axes in Europe which people are very interested in. One was the crumbling of the French-German accord. The other one, of course, the Germans have very good relations with Russia.
Yes.
Investment between the two countries is growing, and they have very strong links as well. But given the fact that Angela Merkel is going through such a torrid time and Germany is doing a lot of soul-searching at the moment, does this have any effect on Russian investment?
Well, partial, Steve. First of all, let me say that I think Russian central bank is largely dollar-euro exchange rate neutral, as I believe it continues to maintain a 55-45% ratio on its dollar versus euro reserves. So I don't think in that regard it will have any major impact. On the other hand, I would say that a vast majority of Russia's revenues are dollar-denominated, i.e. oil and gas, and from that standpoint, the weakening of the euro should not have any significant dent on Russia's, let's say, revenue or top-line P&L. On the cost side, if I were to refer to country as one P&L, I would say that a big part of Russia's imports are euro-denominated. As you know, Russia consumes a lot of products from the Eurozone, and in that regard, I would think that some of these imports are about to become cheaper. So a mixed impact on Russian economy, perhaps more positive than negative from the drop in the euro.
Well, come on, sir. This crisis takes on all kinds of withdrawing of risk, and one of those has been the fact that people are lessening on their desire to buy oil assets. With the lessening of the crude price, that has a big detrimental effect on Russia, does it not, sir?
Absolutely, but that's no longer news. We have been in this zone for the last year and a half, and so I don't think that is oil has dropped from, what was it, 140 down to where, something like 34, and then grew to the 80 zone, and so we're in this oil dropping period for the last 18 months.
So I agree that you have a very good positive terms of trade effect, simply because your revenues are oil and your expenditure is more on the euro side, and the euro is cheapening. But when you are talking about the euro, I guess you are a little bit downplaying it, because I did see your central bank's statement for 2009 concerning reserve allocation, and there you did see that the euro's weighting in your currency reserves had been sharply reduced. So that happened in the year 2009. Now I'm wondering what is going to happen this year with the euro having much more question mark. I mean, I'm really interested in the discussion in your country. So what do people in Moscow think about the current developments we are facing in Europe, the challenges? Is that really seen as something which is undermining their willingness to take investment flows into Europe, or is it just affecting your flows into peripheral markets? You had a great relationship with Greece, for example. Is that being affected?
Right. Well, first of all, let me say that euro was and continues to be regarded in Russia as a second sort of reserve currency. And often when you go into stores or restaurants, you will see prices denominated in what they call nominal units, which in the old days would only mean dollars. And in recent years, sometimes prices are denominated in euros. That is being partially affected. And I think overall the sentiment towards euro in Russia in recent years has been growing and positive. Right now, the 45% ratio of central bank reserves that I mentioned and you have also referred to, I think pretty accurately reflects Russia's foreign trade turnover proportion, i.e. Russia's foreign trade is about 45% in Eurozone, and Russia's central bank reserves are about the same. I think everyone's worried about what's going on in Eurozone, including Russia, But like I said, I don't think the impact on the Russian economy is going to be that direct and that drastic.
The trouble is, it just adds to the perception, I think, that the Russian monetary authorities are unable to manage both the challenge from the external environment and the domestic economy's monolithic dependence on oil revenue. I mean, the government is going to run, what, a budget deficit of nearly 7% this year, and you ask yourself, why is Russia putting itself in this situation where, quite frankly, it has the oil revenue to be able to avoid running deficits of this size at a time when the market is becoming very sensitive to excess spending?
Right. Well, first of all, let's say that when the crisis began, Russia's reserves pre-crisis were above $600 billion. And as you know, as you rightfully say, Russia is very dependent on crude exports, oil, gas, etc. And Russia's stock market was one of the hardest hit in the crisis. I believe the RTS index fell from 2,500 down to 500, losing something like 80% of its value from peak to bottom. However, in the last 12 or so months, it has tripled since then and has gone to 1,500. And so it has tripled from the lows, and it still almost has to double to reach its peak. Has a lot of sort of upside left in it to go. And at the same time, as far as the reserves are concerned, the Russian central bank burned something like 1/3 of them trying to defend the ruble, a move largely disputed and disguised by the business as well. And so melted down its reserves down to 400 billion. Not all of this, by the way, was spent on defending the ruble, but also on protecting the banking system.
We've got to wrap you up at that point. But thanks so much for coming in, being with us and sharing your thoughts.
Right now, Michigan is offering alternative energy companies incredible economic incentives, not to mention engineering talent and lifestyle advantages that can't be found anywhere else. Go to MichiganAdvantage.org